There's been a huge amount of investments globally, but also in Asia. 1 out of every $2 has been invested in Asia over the last 10 years. A significant part has been in China. If you look globally, that's been about 1/3 has gone into China. But that means that there's still a lot of money of investment that has gone into the rest of Asia. The paradox is that a lot of that has been into value-destroying sectors. Over the past 10 years, we look at a 2-year period, 2005 to 7 versus 2015 to 17. In that time frame, the economic profits have dropped from positive 700 plus billion worldwide to a negative 30 plus billion worldwide. Half of that drop has happened in Asia. Now, if we stay at the global level first, there are 3 things that have disproportionately led to this drop. Number 1 is energy and materials investments globally, anywhere in the world. Those have, by and large, in most countries, been value destroying. We used to have a super cycle in the 2005 to 7. Now those have been value destroying in that time frame that we looked at. Secondly, is European financial institutions account for another large part of the 700 decline. And thirdly is China in itself is also is a huge part of the downward drive. As I mentioned, 1/3 of all investments happen in China. Almost $10 trillion of investment in China. 80% of that has been in value-destroying sectors. So that gives you a little bit of a picture of the global, what causes the global downdraft, so to speak. Having said that, we see value creation in pockets in all countries. There are some sectors in most countries, and we see some sectors globally that have been very positive. For example, in the IT and the tech space globally, we've seen that has been a value creator globally. We see pockets in Japan, the capital goods sector, which means investments into heavy manufacturing, automotive, chemicals, has been value creating. We see that tech investments into Japan, Korea, China have been value creating. Even if you take energy and materials, which I mentioned was a large reason for the downward drop, in some places like Southeast Asia has actually been a positive value creation contributor. These investments are now sunk. They've been put in place, so we now hope to start seeing the returns on some of these over time. So the picture will change quite a bit. But I would zoom in on 2 things in Asia, particularly. Number 1 is what we call the troubled 200. These are the 200 largest companies that have destroyed more economic profit than others. We somehow need to find a way to turn around these. And we've seen that turning around some of these troubled 200 has been more stubborn in Asia than in the rest of the world. At the other side of the curve are the terrific 200. These are the companies that really have created a disproportionate amount of that value. And many of them are either in tech, in consumer, and pharma, and we expect to see those continue to drive. And that is actually true across many countries. So at a country level, you would hope and want the country to disproportionately invest in some of these sectors going forward. In Asia in particular, we're seeing increasing regionalization. So we've done a lot of research looking at all kinds of flows, not only capital, not only trade, but also in technology and flows of people and so forth. And we're increasingly seeing Asia for Asia in these flows. Just a couple of examples, we see that travelers, now Asia is responsible for a huge part of the travelers worldwide, and more than 70% of those travelers are actually within Asia. They travel within Asia. Asia is responsible for 48% of international students. A number of them are intra-Asia. Most of the trade is actually happening, almost 70% of the trade is happening within Asia. Capital inflows, capital goods is happening within Asia. So we see Asia for Asia. So that's one of the chapters of the next of globalization going forward. RCEP and such treaties, I think, will increase that regionalization because some countries have opted out, as you know, but many countries still are in. We are positive to these trade treaties. We believe that they help smooth trade, and that is generally a good thing.